Well, good afternoon. This is Rich Morrison, and welcome to my latest edition of the Thinking Cap, where today we're going to talk about plugging in the prospective planted acreage numbers into some balance sheets and try to look at what could happen this year. We've got a lot of noise this week. We did get the report numbers on Monday. We've got tariff talk going on right now. What's going to happen there? What retaliatory action are we going to see? All this good stuff. But thought it'd be time to take a deep breath and look at the markets from a perspective of supply and demand. And so let's dig into the numbers. And these are the numbers that we got Monday. And then we'll look at a couple of other alternative balance sheets as well. So let's start out with the corn. Corn, USDA gave us the biggest surprise at 95.3 million acres. They're starting out, I believe, with a yield around 182. That's their trend line, maybe a little bit above or below that. We'll see what eventually happens. If you follow through the balance sheet using their demand numbers from back in the February baseline projections, and I also reduced the beginning stocks by 140 million bushels. I think that the export demand is so great right now, USDA is going to have to reduce this 1540 number. So I took it down to 1.4 billion. Um, you do that, even taking those stocks down, you're looking at ending stocks potentially at 2.262 billion bushels. And so this is what the trade is dealing with right now. Some people thought that some of this was already in the market going into the report. There were a few private analysts talking above 95 million acres. I was thinking we'd be up close to that level. So we'll see, but eventually what ends up happening. Now, under some different scenarios on yield. First of all, I think you would say that if we get that many acres planted, the odds of getting a trend line yield are probably a little bit on the slim side. And so I think the first thing USDA needs to do is take the yield down a bushel an acre because you're going to bring in some fringe acres. Well, you do that, you follow through to ending stocks, you're still up close to 2.2 billion. What if we drop yield down to last year's number, 179.3? Maybe that's more realistic. You do that, you flow through the balance sheet, you're still over 2 billion bushels of corn. So I think that this is going to make it difficult, at least now for the next 3 to 4 weeks, for the corn market to do a whole lot to the upside until you get into potentially, if there's an issue planning, weather-wise. I know we're looking at some extreme rain here the next couple of days in some parts of the country. Then it looks to me like the 6 to 10 day forecast, 8 to 14, is on the drier side. So maybe you catch a window there where we start to get some field work done. But again, it's really, really early. We're only the 2nd of April as I record this. So we'll see eventually what happens. Bottom line is the numbers are all above 2 billion bushel carryout. That's what the trade's working with. And so if you look at the chart right now on December corn, we did get a nice bounce back yesterday. And again, I'm recording this on Wednesday the 2nd. Here this morning, as we record this, we had traded lower initially on tariff talk. Markets had come back. We're really bumping heads up here against several moving average lines, the 200, the 20, the 100-day moving average, all right around this 450 level. Seems like to me 450 is probably going to be a magnet for this market here for a little while until something changes, whether it's something dramatic on tariffs, whether it's something dramatic on weather. The funds have taken their net position back down closer to zero now. So we don't really have their weight to deal with in this market. You can kind of see if you go back, you look at the high that we had this spring up around 480, the low, the double bottom down around 430. This 450 level's right, almost right in the middle. And so I could certainly see a situation where this corn market trades at this level, plus or minus a dime, well through the planning window. You see the RSI at 45, stochastics pretty neutral as well right now. So what's going to happen going forward? Well, we are entering that time of the year when the market does give us some opportunities. You can see historically, we trend higher April, May, June. This is our peak selling window. So I would have to bet that there's going to be some better selling opportunities. You get a scare of some sort, a weather scare, whether it's, too wet in spring, too dry early summer, something, that gets the market up and going. And the fact that the funds have liquidated a lot of their length probably sets us up for a little bit of an opportunity to the upside. So to me, a first goal on marketing is always the insurance price. If we can get back above 470 or at 470, I think I want to advance some sales. You can see the last time we were up at this level, we had the RSI and the stochastics way into overbought territory for a number of days. Maybe 480 is the next target. I know we're not getting rich at those levels, but if we have a good yield, I think a lot of us can still make some money there. So that's probably my next target for making some sales. And you would have to think that over the next 90 days, we'd probably get that opportunity. Switching over to soybeans, USDA gave us an acreage number at 83.5 million, less than expected. If you plug in their trend line number at 52.5 bushels, gives you production up close to 4.4 billion bushels. They're projecting demand above 4.4 billion this coming year. The big star here is crush. We're going to continue to crush record amounts of soybeans with more plants coming on board. The questionable number is going to be this export number. I still think this is too high. I don't see, this was USDA's number, by the way. I still think that we're going to see exports set back a little bit because of the size of the Brazilian crop this year. And the fact that Brazil's going to be shipping beans into the fall window, into the new marketing year here for the United States. So it'd be a shock to me to see this big of a number. But if you use USDA's demand, that takes your ending stocks down to 320 million. Now, what if the yield doesn't match that number? What if we drop a bushel to 51 and a half? Well, now you're looking at stocks below 200 million bushels. And I think at that point, you have to take this export number down. What if we came in with this year's yield at 50.7? Now you're clear down to 128 million, which is rationing type numbers. And so then you're taking, exports down at least 100, 150 million from where we're at right now, maybe back to where we were the year before, down below 1.7. So this, I think sets up for the bean market having some pretty decent support here ahead of the U.S. growing season and into the first part of it. We know what the size of the South American crop was. Shoot, we just saw that Brazil had a record export number for the month of March. That came out today. So, they're got a lot of beans hitting the market. We still have to grow beans here in the United States. We still do get some export demand from the Chinese. We still are crushing a lot of beans as we go forward. So we still have to have the crop. And you can see what the market's done since the report. It's been a steady little bump here over the last several days. We're at almost 30 cents now off the low. We had pushed above the 50-day moving average so far, held it today where we're sitting today. The key technical point here is this 200-day moving average, this light blue line at 1044. We did probe above it back at the beginning of February and couldn't hold it. We have not traded consecutive closes above that line since December of 23. So it's been a long time since we've seen that happen. If that's able to happen, it probably opens up the window for some upside. Maybe back to this set 1075, maybe back to the high back in last fall at 1104. Once again, I want to improve on my insurance guarantee by selling above that price. And if you look at and mention the technicals real quick, markets turned higher, RSI at 58, stochastic still leaving some room for some upside here. And kind of like corn, this is our seasonal window where you tend to see the markets do give us a better opportunity. And with less planted acres, I would tend to think that there's at least some opportunity to get back to $11 here on this November contract. So things have changed a lot with that USDA report. Looking at the wheat numbers from the report, USDA came out with a bullish surprise, 45.4 million acres. If you use the percentage of harvested acres that they've been using the last few years, their yield at 50.1 bushel gives you follow through the balance sheet, it's virtually unchanged from this year. Nothing really to get too excited about. Now, what happens if I use the last 2 years' yields? What if we go up to 51.2? If you do that, now you're taking your stocks potentially pushing 900 million. That's pretty bearish. And with the corn market really kind of leaning bearish as well, there's just not anything here to hold the wheat. And if you couple that with potentially, the end of the Ukraine war, then, that's been a little bit bearish to the wheat market as well. What could be bullish? Well, if you go back to 2 years ago, we had a 48.7 bushel US yield, and that would take your stocks down below 800 million. I wouldn't call that bullish. It may give you another shot to sell 6 to 650 wheat, though, and which is probably what we would all like to get done in the winter contracts. Now, if I just look, I'm looking at spring wheat here today. Minneapolis spring back up to 625, call it, off of a new contract low just a few days ago. We pushed above the 9 day moving average, right now sitting below the 20-day, but you can see the RSI and stochastics have turned higher. This is going to be a little bit of a road grader trying to get higher, but I think, as far as selling targets, I probably would still want to try to improve on my insurance price at 655. First target, first big goal will be getting above the 200-day moving average at 644 and a quarter. And so can you get that done? Then, probably then set your sights on 655 to $7. And again, historically, we're in that period where the markets tend to give us some better opportunities out here into May and June. So don't panic just yet. Be looking at some better opportunities to the upside. And then finally, in cotton, uh, it was a bit of a surprise as well, a bullish surprise on cotton acres at 9.87 million planted acres. A lot of that went to corn and soybeans in the Delta. Uh, I think the biggest thing that we've seen over the last few years to me is not yield. Yes, you see some variability in yield, but it really comes down to harvested acres. Do we harvest the dryland acres or not? And so that's the number that I changed as the variable in here a little bit. I left the yield unchanged at a midpoint of where we've been the last few years. But what if we harvest 8 million acres, which is historically a tight number, using all of USDA's demand numbers? 8 million acres is still pretty big. And so if things go well, we're still looking at carry out about 4 million bales. So that's not bullish. If you were to go to the same percentage as this past year, then that takes you to 7.3 million harvested acres. Under that scenario, and keep in mind USDA is forecasting good export demand, that might be a stretch. That would still take stocks down to 3 million bales. And if exports drop, now you're down below 3 million. I think that's a little bullish from where current prices sit today. Finally, if you go back to 2 years ago, percentage of harvested acres, now you're looking at a big, big drop in ending stocks, and you do have to cut export demand. So you can kind of see that, with starting out with this lower acreage number, it really doesn't set us up for a building scenario. And in fact, it sets us up potentially for a bullish scenario. And that's what the December 25 cotton market has done in the last couple of days. Now, it just can't seem to get a lot of traction because we're not getting any old crop demand that's really getting things fired up. But we have improved on the insurance price, almost 2 cents now. So that's a positive. The 200-day moving average is our first big goal. Can you get through it? Now if that happens, then I'm looking at the December high at 70, almost 73 cents, the October high almost 74 cents as some opportunities maybe to do a little bit of marketing on some irrigated cotton ground. Um, Stochastics pushing 60, RSI pushing 60, stochastics up in the 80s, getting a little toppy here, maybe short term, but the funds are still short. So give them, if they decide they want to buy it back, we've got some potential upside. So I don't want to be a panic seller just yet, but certainly up in that 72 to 74 cent range, probably want to look at it. And historically, this is the month. And so if cotton, for some reason, if we strike a trade deal, for example, and all of a sudden the cotton market decides it wants to buy acres, it's got to do it now. And that's what's happened in some past years. And that's why we've tended to see highs during the month of April. So now's the time to put some offers in up above the market. Early plant dates, we're kind of into that window right now on corn. So, I would assume that just about everybody in the southern half to 2/3 of the corn belt's going to be up and rolling if and when the soil permits. Soybeans, we're still, a few days away, but you can check out these maps attached with the market report email letter every day. And then the big acreage number after this is going to be on June the 28th or June 30th this year. And so that's when we get our next planted acreage report. And so keep that in mind that these are just temporary numbers that we just got this week. And if you look at the changes we've seen in past years, it's really kind of interesting that corn the last 4 years has actually ended up higher in June than it was in March. Maybe that's because we had good spring weather. We had a couple years before that where it was lower. We had quite a bit of prevented plant. Beans have ended up being lower with corn higher. So we know that these numbers are not final that I showed you here today. That's why I wanted to look at some alternatives as well. And so kind of see how things would shake out given that situation. So with that, I thank you a whole lot for listening to this latest edition of the Thinking Cap. Take care. Have a safe spring. We'll talk to you again very soon.